Hello, hello, hello. Caught you off guard there.
Sitting here just like, I might hit my vape before we go live.
It's like sitting there.
I don't vape.
Wait until he puts the vape in his mouth. Okay, show him.
You got me. Damn, dude.
I'm
Top
sure
of the
you're
morning to you, boy. You're midday out there in Eurozone, eh?
I am, yeah. Midday for me. Top of the morning to you.
Yeah,
Some
I had
people on the West
plans.
Coast haven't woken up yet.
I had plans to head down to Toronto today. Toronto. But those plans have been very recently canceled. So that's why we're going live so early, because of those plans, which are now canceled. So thank you all for coming. If anyone's here watching going, whoa, what's so early? The Eurozones, the Asians, you guys will be, 10 p.m. by now, 9 p.m. So you're good. But for those of you who are joining us for the New York Open, we appreciate you. Thank you.
And one hell of an intro. I barely even need to do an intro myself now, but yeah, it's always hard to pick a time. Everyone is so spaced out across the whole world, so can never catch everyone. But today we are doing a different time. Nice to see that people are flooding in fast and they haven't forgotten about us. So
Who are they? That's great. That's great. Lots of good stuff to talk about. We had a fantastic campaign this week. Can't wait to dig in.
Yes.
We did it and we talked about it while doing it, but I haven't had like a nice wrap, like a nice sort of, this is how it all went down. We'll tweet something out to that effect today. And we got some fantastic content around it, recording all the different views and angles.
But
this is a topic that I love. That's why you brought me in. So
I know you do. Yeah, I wanted to come on and talk about asset classes in crypto. That's what we're going to be talking about today. One of the main things that people say that stops us from getting adoption is like essentially that the assets are shit, for lack of a better word, in crypto. And I think that you feel strongly about this as well, and you have some spicier takes and ways to phrase that I could.
Yeah.
So yeah, without further ado, we brought RT Random Task on. Why don't you just tell everyone quickly in the audience who you are and what it is that you do?
Yeah, at Random Task 555 on Twitter. Didn't put it on the screen, so hit me with a follow if you are enjoying this conversation today. Yeah, I got into crypto in 2017. Used to be a teacher, so I just love to talk. I love to rap at the audience. No, he started Magnus Capital in 2018, self-funded VC syndicate. So just a crowd of fantastic people who wanted to do more than sit around and ape into ICOs. In 2017. We put our networks and our net worths together and built something beautiful. So that's been my game for the last 7 years. And we've done lots of incubation, advisory, accelerator type stuff with projects, helping them get to market and then go 0 to 1 and then ideally 1 to 10. And it's been a wild ride. And one of my takeaways, and then started working with Nirvana in April. And a big reason for that was that my passion, it just struck my passion. It's, coming out of the last 6 years, a lot of seed investments, a lot of teams we worked with. And as you said earlier, like in the market in general, like a lot of assets coming out and not a lot of innovation. Like there is a lot of innovation out there. Let's be clear. I mean, really impressed with what you guys are doing at Spicenet, for the record. Paymasters in general, or whatever that's called. That's just such a sick innovation. Like there's so much you guys got going on, and that's why I'm here, because I love you guys. But
yeah,
there's a lot of shitty assets out there. Let's be honest, and nobody's really reinvented the wheel in a long time. It's been a lot of this thing, and I was, if you watched our stream yesterday, I apologize. I'm about to do the same rant, but it's very topical for today, and that is that the game plan, or the playbook rather, and I know you guys did this, so just to be clear, I'm not hating on this as like no one should do this, but this is the fact. You pre-mine a bunch of tokens, you create them out of thin air, you create a pitch deck, you say we have 1 billion supply and 10% is going to go here and 10% is going to go there, and you assign a value to those tokens, and then you raise at that valuation, and people give you money, and you use that money to build a product, ideally, and then market that product. And there's usually a big community airdrop allocation and points and all these things. And then you go to a TGE, you got to get a market maker, you get an LP, you get a centralized exchange listing, and you hope that when you launch, the market is bullish and people will just buy your token because they're excited, and you run up your metrics and your user base and your traction stats using these incentives, and then hope that when the incentives are done, some measure of that large audience you've acquired sticks around. That's it. And so you're essentially assigning value to a token that does not inherently have any value. And the more and more this happens, and it is this is the playbook, so it's happening all the time. It dilutes and dilutes and dilutes. And what we're seeing now is it's turned into like an industrial scale farming activity, right? Where you just have guys with large followings on Twitter. They're not even hiding anymore. They're like, here's the 25 protocols I'm farming. Like, and if I'm like a founder of that protocol, I'll be like, bro, like, be subtle. You know, like, did you just pretend you're a user that likes my product for a minute?
Yeah.
And they're just telling their audience, they're like, guys, get in here and like stake 2 cents so that you can have like, dude. So
it's
that's
people's full-time jobs, right? Like this is a funny thing that that one of our partners said to us the other day. We were just reaching out to our partners, getting advice for this campaign we have coming up. You know, we'll have a bunch of users using our product in testnet on one of our first live integrations. And we're like asking him, you know, if we open up the door to this amount of people, you know, like how many people can we expect to do it? He's like, dude, you open up the door to this amount of people, it's all of those people's full-time job. They're going to find a way to do all the things that you want them to do very quickly.
Yeah. Well, that's what I mean.
And so to do this shit. Yeah.
It's become a very efficient market. And this big word that we love to use in crypto now, which is unfortunate, is extraction, right? How there's value there. This team has, you know, and look, there's a lot of really good teams with very strong products, and they're brilliant minds and they're good actors, and they're using this strategy because it's the status quo. It's what you do. And if you don't do it, we're not doing it. And trust me, it's harder. It's the hard way to do things. You don't have incentives. You don't have a fat war chest to buy KOL tweets and all these things. Like it's a struggle. It is harder. So for those who are doing it, I'm not here hating. I'm just pointing out this is the state of the union. This is how it works. And we're here to talk about value today. And when you see TGEs coming out and tokens coming out, it's very hard to maintain value. That's high FDV, low float stuff that was not new. This was like a thing that was identified and shit on back in 2022, right? As the 2021 thing came off, particularly a lot of like the Solana projects that were listed on FTX, you know, down with FTX as it collapsed, you know, things like FIDA, things like, what were there was a bunch of these, like, I know, because I had a basket of them in mid 2021 and they mooned and I was like, this is awesome. But then through like 2022, we were like, what was the one? Serum was like 88 billion FDV, right? And it's like, there's not $88 billion of value there, but that's what they're worth right now. And if you sold them, you got out good. And they're not worth anything anymore. And so I kind of thought we were going to move past that. But what I realized is like, well, how else are you going to raise? You know,
that's the thing that I was going to say.
Like, tokens are a fundraising mechanism for most part.
And regular companies also are built on VC. Like so many of the most successful companies that we see have raised VC capital early in their life cycle and then used the money and also the relationships with these VCs to build amazing things that change the world. And I think to give credit where it's due to these VCs, like I think most of the people that got into crypto VC didn't come in saying, I'm going to see how many times I can rinse and repeat a TGE dump. They came in because they were like, there's some really cool shit being built here. Oh, I want to fund this. I want to see if I can help it. And then it's like, what's next, right? Like up to date, the token launch has kind of been the exit event, whereas that should be like the genesis.
Right? It should be the start of something beautiful instead of like the end goal, right? And look, I'm not naming names and I'm not pointing fingers. If you're watching this and I invested in your project, probably not talking about you. But there are just a lot of founders who are like, fuck it, we'll raise a couple mil. I'll take a nice salary. If it works, it works. If not, I made 250K this year. and we tried our best, and they're on to the next one. And they're serial founders. Again, not all bad actors. Some are. Not even like, I don't know, bad actors is a spectrum. You know what I mean? Like there's people that are like,
Yeah.
fuck it, dude, I'm going to scam them. And then there's guys that are just like, I'm going to try my best. And if it doesn't work, fuck it. And that's kind of bad too. That's not great.
Yeah. It's
And so finding the right
quiet
balance.
quitting. I don't know if you heard the term quiet
quitting.
quitting.
Yeah, I haven't heard that term. Slow rug, quiet quitting.
Yeah.
And
quiet quitting is like in the corporate world when you're working for a company and you basically say like, all right, fuck it. I'm going to stop trying to do my job. And if I get fired, then it's fine.
Yeah,
it's
but
like,
I'm going to collect that check until they find out, That's
that's like the same with the founders. Like, it's like, I'll just not try that hard. If it flops, like I made a salary, but if it succeeds, great.
Yeah. And I'm smiling a lot and we're having a good time, but it's not great. It's not great. It's giving a lot of really good founders a bad name, right? It's kind of like, oh, those founders, like they suck. And so at the end of it all, what we're seeing is a lack of belief. Belief is just eroding, right? And I was reading, this is not an original thought. I was reading this on Twitter. Somebody put a thoughtful post about this idea that, there was really strong belief at a certain point where you would buy a token. You didn't ask about the revenue. You didn't really ask about any of this. You were just like, oh, dude, that story is amazing. I want to be a part of this. I want to hold this token. And there was a pretty strong collective belief, and that belief shifted from various metas, whether it was ICOs, where we all believed these white papers were going to turn into trillion-dollar companies, or it was NFTs, which I kind of skipped over. I never had much belief in those. I was sure to buy a few and lose money on them, but and then like meme coins, the belief there was weird, it horizontal dilution and extraction at the umpteenth degree. And then, it kind of rolled back this year. We've got Echo doing some nice raises and being a little more equitable with their platform, and Sonar came out of that. Shout out to Kobe. I thought that was a really nice return to values. We've got ICOs kind of making a comeback. There's been a few loud ones. I think MetaDAO, I'm not super familiar with their model, but ownership tokens, things like that. So there are solutions coming down the pike. But at the end of the day, we still have to just return to this conversation about value. If you assign a value to something, it's not real. And you might hope that reality catches up later. But how do we restore belief? And in this gully of despair in April, when things were really nasty, and we were watching this washout happen in the year that was supposed to be fantastic. And I was just feeling it. I was feeling it very deeply in that period of time. And we had just discovered Nirvana at my fund. A couple of the guys, we were there. We were, picking up bags, building positions, talking to the team, and working with them, and just giving, advice as needed, and just chatting and giving them ideas. And I spent a lot of time talking to Sid through that month. And he said, hey, there's an opening. I'd love for you to come in. And, I need a guy like you around. This would be great. We could work together. And I was like, okay, thought about it for a few days, and then was like, I'm in, because I want to be a part of something that just flips this whole, I don't want to call it a meta, this status quo, this thing we're talking about, this whole thing just flips on its head, right? Where Nirvana started at zero, there's no value there. And then people looked at it, they saw it, they believed in it, and they said, I would think there is value here. And I'm going to bring USDC, a valuable token that is worth $1, and I'm going to deposit it. I'm going to mint your token. And so the value started from the ground up. Instead of being assigned, it was kind of delivered or created from zero. And that's like a complete inverse. It's similar to Bitcoin in a way where there was no value. Somebody turned on their computer, they launched the network, they started mining the tokens, they put energy into the network, and that created the value. And it was not very valuable for quite a long time. In fact, it was quite not valuable for a very
when Bitcoin hit $1, it was a massive feat.
I bet the $1 party was the most exciting moment in everyone's life at that moment. I still remember the BNB $1 party back in September 2017. Like, it was an exciting moment, right? And so when you have these things that start very low, and BNB is actually another interesting example because it was not very valuable during its ICO. I'm sure I forget the exact valuation, but it was low. I was not involved. It would have been pretty cool. But at 43 cents, I went and used BNB or Binance. It was a sketchy Chinese exchange at the time. And and they were the only one with an exchange token, and they were offering fee discounts. And I was like, oh, that's valuable. Traders trade, their bottom line is profit. And if I can get 50% off fees, I'm going to use that. There's value here. And then, turns out they were the biggest exchange ever later on. But so that, that's another interesting example. But with Nirvana.
Yes, because you're giving a couple examples, I wanted to, and we will dive into Nirvana and how this applies to them, but to lay the context here, like, what do you think makes a good store of value or an asset that has some sort of value to back it up?
Yeah. So if you go on your Chat GPT today, kids, and you look up what is a store of value or what are the properties of a store of value, what makes something a store of value, it's not 2 sentences and it's not super quantifiable metrics. It's actually kind of vague. And there's 8 particular properties. Things like divisibility and liquidity and expectation of outperforming, like or maintaining buying power, and there's this series of criteria that sort of make something a good store of value, a bad store of value, not a store of value, and so it's not really something you can just set out and say,
Oh,
I think we cut out here.
yeah, I lost you for just a second there.
Okay.
It's not something you set out and say.
Yeah, it's not something you can just set out like a lot of projects do. They come out and say, we are a store of value. And that's good. I think if you have certain design choices and of course you just set out and say, this is what we are creating, we are looking to become that, then that's fine. But a lot of things just end up there, right? Like Bitcoin just kind of ended up there. I don't think store of value is mentioned in the Bitcoin white paper, which weirdly enough, I have never read. I sat down to read it twice, and each time I was like, I know what Bitcoin is.
I get it. Yeah.
This is fine. But yeah, I marked safe from ever reading that. Unfortunately, it's probably something I should read at 10 years into this thing. But anyways, I don't imagine, this would be funny, I'm gonna get fact checked on this. I don't think it talked about like we're gonna create the greatest store of value ever. It was peer-to-peer cash, right? But over time, it proved to
Hmm. Not sure. I'm not sure if it's you or me that's cutting out here.
That was my elevator music. No, I turned my VPN off. I was pretending to be from Mexico because I can't use anything if I'm not. Good old Mexico lets me in. So, anyways, we're back now. That should fix it. It's not a great VPN. Anyways, where was I? Oh yeah. So, Bitcoin fell into the store of value narrative sometime in the last 4 years, 5 years. It didn't set out to be. And now anything that has its similar properties, most recently ZCash, 21 million supply, POW, pretty solid distribution, reasonably good liquidity, maybe not at a global scale, but as a trader and crypto guy, like it's one of the more liquid tokens. It's in the top 15 now, I think, for crypto market cap. So it's now being talked about a store of value, a private store of value, the Swiss bank in your pocket. And so point being, you can become a store of value just by over time, the data rolls in and you say, hey, look at that. That was a store of value. Like, it's almost like an afterthought. It's like, it has turned out that this has been storing value quite well. And then there's some protocols that are setting out to be a store of value from day one. You just disappeared, dude. This is getting weird. I think I'm just on my own now. So I'll just talk to myself. So let's get down to brass tacks. There's Nirvana Finance. We've taken a very specific and intentional path. And as far as I know, are the only protocol that quite literally stores value, where the value enters this protocol and a certain amount of it is squirreled away into a floor region, in the lower part of the bonding curve, the price curve. And so as Nirvana approaches $3, let's say, the protocol, the math, the calculus, it determines exactly how many in supply there are, because all of them came out of this bonding curve, this AVM. And then it establishes, okay, how many dollars do we have stored in this protocol? Okay, so that means we can set this floor price at $3, which, or if the price is $3, let's call it $2. And that means that 100% of the supply, worst case scenario, could be redeemed at that value. So that value is stored in the protocol. It's quite literally storing it. And so that's like a pretty radical shift from, hey, look at that thing. It's storing value really well, as it turns out. Entirely dependent on humans and market makers and counterparties, right? Bitcoin is worth, what is it, 90? Are we back in the 90K today? But it's only worth 90K if I can find someone to buy it from me. And it's pretty easy to do that these days. You can go on most exchanges. There's a lot of on-chain derivatives. You can swap into versions of Bitcoin on every chain, depending on liquidity in which chain. The point is, you are still dependent on humans, and that's all fine and good when things are working. But when things stop working, it gets really weird. And we don't have to think too far back to October 10th or the big 10-10, where things stopped working. And Bitcoin and a number of other assets, some of them dropping as low as like tenths of a cent. I think Atom is the one that stands out to me as the one that got the most roasted on that shutdown of Binance APIs or whatever went offline. And so you're like, whoa, like in that moment, I think a lot of people felt it. They're like, okay, this is weird. We're depending on humans and the systems that they're using. All that to say, protocol, math, code as the counterparty should be the goal. It's what we set out to do with Bitcoin, right? And this isn't about pitting us up against Bitcoin. I think that's not a debate that is worth having at this point. It's really just like, let's try to do this a different way. Let's do for value and liquidity what Bitcoin did for monetary policy and ownership, right? The inflation thing, like, I'm going to print $1 trillion, right? I still remember 2008, they printed like $380 billion for that bailout. And it was like, whoa, like that's a lot of money. Like those banks got a massive bailout. And now it's like, we're going to print $1 trillion for COVID. And they're like, that's $1 trillion being printed. Like the numbers are getting crazy, right? And the stats on how many dollars in circulation were printed in the last few years, it's a lot. It's like 80% of them. That's an old stats. It's probably more now. And so Bitcoin set out and said, okay, put this white paper out there. Monetary policy is set, 21 million ever. It's predictable. It's coded. It's math. It's trustworthy. And that is a very powerful idea. Clearly, we have a $3 trillion asset, or maybe 2 today after this little dip. So the point is, it was the replacement of humans with code and math that was the real innovation. Alice, Bob, who owns what, transfer of value, no middleman. That's brilliant. And that's why we're here. That's the only reason all this stuff exists, is because that innovation was created. And so Sid, my co-founder at Nirvana, he's like, okay, that's inspiring, but it's still a very human dependent market, right? TradFi, fairly extractive, super efficient, like Jay Powell like scratches his eyebrow and a stock drops like 4%. It's just like, that's the third eyebrow scratch. He's nervous. So it's like, it's insanely efficient. And in a way of like extracting from, if you ever watch The Hummingbird Project, is an interesting movie about like how much they spend on just trying to get like an extra nanosecond of speed on their execution of orders. All that to say, we kind of just took that, where we're trying to flip that model on its head, but actually we just made it even more efficient. We took that extractive piece, sophisticated actors taking, extracting value from unsophisticated actors. It's still just an all too human problem that's going on in general. We haven't really solved fully for the human thing. Humans are fallible. They will take from you if they can. They will, and it's not because they're bad people. It's just because they got kids too. They got generational goals and ambitions.
And then everyone screams, "Market makers nuked us!" Like
the market makers. And look, I don't think being a market maker is a very, super fun, exciting, perfect, like profitable everyday job. Like they're sitting on nasty inventory right now. Like when altcoins go to zero, market makers often held a lot of that. So it's not that they're just like these evil bad actors either. We rely on them You know how much we rely on them? Because when they go offline, 10-10 happens.
Yeah.
People are like, wait a sec. It was all just market makers. Like, as soon as their system freezes, we're like, wait, nobody had bids in the book. No real humans had. So the point is, the Nirvana model, all of that's replaced. It's just a protocol. It's a protocol that sits there 24/7, 365, and it tells you exactly what your price impact will be on a buy, on a sell, and there's this infinite bid at a certain level. You can rely on that bid to be there. And that's why when we have these insane dips, Nirvana doesn't dump as hard. Because people aren't panicked. They're kind of like, well, I know my bottom line. And that's a really interesting dynamic that's emerging. And we're launching the next iteration of that with Samsara. We're going to apply that same kind of math and code and reliability to other assets that already exist. Now, we can't solve for things like, for example, we have NAV tokens, NAV BTC. The BTC market is the BTC market. We cannot solve it. It's already out there. But we can apply this tech on top of it and create a derivative that will outperform it, that will capture value along the way and deliver it to NAV token holders, lifting the bottom line, access to credit, interest-free loans, all that stuff. And so it's a really incredible stack. We're taking it public. Well, it's been public with Nirvana. We're taking it into the next kind of zone with Samsara to sort of Nirvanify all existing assets. And then the next phase 2 is to launch pad it. And we've got 3 launch pads building. The idea is we're not building them. We've created a SaaS layer, software as a service. We've taken this AVM tech, we've put a name on it, and other builders can come and build on top of it because we'd like to see a world where every chart has 2 lines on it. There's the market price, up, down, buy, sell, normal, fine. Everyone's used to that. We like it. And then there's the floor price, which is the amount of value that can be guaranteed by the protocol itself. And so the launchpad's probably the most exciting piece. I'm really fired up for Samsara after that. But most people in the community agree, like it's the unknown too, because there's only so many assets that exist now. And really there's only so many that are worthy of such a market. We're not going to just list, every little headline shitcoin that gets launched on Pump Fun every day. Like last I checked, there was like 20,000 a day. They're not going to make it on here. We want to list sound assets with quality designs, innovations, liquidity. And there'll be hundreds, but there'll be some selection process. And then from a store of value point of view, or is another one on Solana that I think is really interesting. I talked to you about that a few weeks ago.
I was doing some ore farming. It was
me too. And I was farming, and I think I'm underwater on my mining. But that's because I was mining it in like the 300 to 600 range. So it the P&L shows bad. But look, it's early days. They've actually been live for quite a while. This is their V2 or V3. But another innovative thought on how can we create value? And so when an OR token is emitted, it's emitted because people put up their Solana to essentially have a shot at getting a piece of that. And so there is value being put in to the tokens before they're emitted. And so it's just another way for someone, it's another design, it's another attempt at innovation at store of value asset. And they draw a lot of revenue in from these mining operations, and then they use that to essentially buy the token, or I think right now they're creating bids just below price. Anyways, there are some really innovative ideas coming up around the store of value because, like going back to what we started with, it's really hard for tokens to maintain value or liquidity.
Totally.
We got to solve for that. I want to be a part of that solution. And that's what we've been building.
And then so creating like a derivative, which is essentially what the NAV token is, of an underlying asset where you can guarantee that the NAV price of the token, right, that floor price that you described, will always outperform the underlying asset, right?
Yeah, the NAV of these NAV tokens will always outperform by like just mathematically. It has to, and that's a crazy thought. You're like,
that is a crazy thought. Which is,
how does that work?
Which is So now I think it's like we should back that up with the campaign that you guys ran, because like you
the
say
record
that
skips like, hold up,
people are like, oh, like I've heard that story before. Get the fuck out of here. Like,
well, and skepticism's healthy, and I think it should be. And like I said, belief is at an all-time low, and so the battle, it's an uphill climb. To educate people on this topic and educate people on the product and have them, pretty much every call I'm on is met with skepticism to some degree. And that's healthy and it's good. And it means you're really creating something that's different and new. So I don't mind it.
Yeah.
It's very easy to get on a call and be like, so we got this $1 billion supply, 10% is going to go here, 20% there. You want a piece? Like everyone's like, okay, I know how this works. But when you come in and talk about the things we're talking about, they're like, hold up, start again, like take me through it because this sounds crazy. I don't believe you, and then we take them through the product. And that's the nature of the campaign we ran this week. Which was my idea, I might say. I'm very excited to say that I had a good idea this year, which was like, let's crash this shit. Let's break
try to prove ourselves wrong, right?
Yeah, like let's go out and invite the world in and say, if you can come and break this thing, because all the benefits I've talked about here, the outperformance, the interest-free, liquidation-free loans, the leverage, like all of that stuff is entirely dependent on the floor working. Like, nothing works if someone can even sell 1 pip below the floor. It either works or it doesn't. And if it doesn't, it's useless. And if it does, it's revolutionary. And so we need to prove that. We don't want people to come in and be like, man, I hope this thing works. Like, we want to put it out there, welcome everybody in and say, faucet as much of this token as you can for free. And then on this day, we are going to just crash the shit out of it. We are going to generate the biggest black swan event you could imagine.
And 100% of holders sell off.
Like ideally, I don't think we had 100% sells. And people are sleeping. Some asshole was buying. You know what I mean? Like there's trolls, but the point is,
buy the dip.
We have 5 coins. Let me pull it up. Get the screen share up, Bob. Jamie, pull it up. And so we've got this DevNet spun up. We've got 5 markets listed on it, and actually they're all still pretty red. Let me zoom in a bit for those of you on mobile, and you can see here nice healthy drops in price yesterday. And again, somebody's buying. It's all good now. The campaign's over, but we simulated in real time with the exact clone of the real tech what it would look like if everyone sold everything as fast as they could right away. And we'll go into the NAV OR market. It's at the top line. And so you can see here, it actually did touch the floor for the OR one. And I sold as much as I had. Like, the point is, it just trying to sell below the floor is like trying to type 4 + 4 in a calculator and get a number other than 8. You can do it. It's going to take a long time and it's never going to work. You know what I mean? So, but that's not something that's easily graspable without trying it. So we did that yesterday, and it looks here at this time frame like it didn't touch the floor. I'll just point that out, that this is a line chart. So when the candles close, you can't see the candles, but on the back end, based on the time frame, it only records the candle close. So on this time frame, it doesn't look like it hit the floor, but as you zoom in, you can see on the daily it did. So and actually, candles are coming to this, which is exciting. I've always wanted the wicks to touch the floor and show pure history. Candles do show a pure picture. Anyways, point is, we tried to break it. We invited everyone to break it with us. It could not be broken. You can see here the Bitcoin market. People really tried. I mean, this thing, and that's the design. This red line represents the floor. It's the protocol holding the Bitcoin that was placed into this market to mint the NAV Bitcoin. And a portion of that, a rising portion of that, is held in the reserve, and it's there as an infinite bid 24/7 365. There's no human that you have to call and say, like, or message or signal or put a bid in the ask. Like, it's just there, and it's there 24/7, and you can borrow up to this floor region, and that's why it's not liquidatable, right? Because you're 1 pip from liquidation, and the price can only go 1 pip from there, and that's an impenetrable level. Now, it sounds fantastical. Sounds unlikely to a lot of people, but the fact is, it's just math. It's just math. And so the question is kind of like, well, if this is so great, why hasn't anyone done it before? And that goes back to the start of our conversation, because it's hard. It's hard to create something that starts with 0 value and put it out there in the world and then talk about it without airdrops, without a pre-mine. You haven't enriched yourself. You haven't printed a token. You can't do that with a system like this. You have to have it pure first principles, launch with 0. And these markets do launch from 0. Well, in fact, they launch from $1. The very first NAV token of any market we list is going to launch for $1 worth of token. So if you want to buy NAV OR and you're the first buyer, you're going to pay $1 worth of OR. And ore is trading at like $96 today. So whatever that works out to. And the reason we stuck with $1, first of all, Nirvana on a token started at $1. So I thought that was nice. But with Pump.Fun, one of the things they did that was really nice is they normalized the billion token supply. So when you look at the value, or the price, I should say, of a pump suffix, if it says pump at the end of the ticker, there's a billion supply. And so you can look at that price and you can extrapolate what the market cap is. If it's trading for 3 cents, it's 3 million? No, 30 million. You know what I mean? So like if it's trading at $1, it's $1 billion market cap. And so that was a nice piece of alignment where you look at all these meme coins and you can kind of just guess what the market cap is. And so by the same logic, every one of these things launching at $1 means, you look here at the prices, this Navor right now is trading at $3.73. And so it's up 370 or 273% since it launched. And so this is $11, $6. And that's just a nice way to align it, because these are priced in the underlying asset. And so where do you find that alignment in dollar terms? And it starts at $1. So every time we list an asset, it's like a TGE. It's a new derivative that has no pre-mine, no insiders, no VCs, no nothing like that. And I'm not hating on VCs, but we're not involved in this one as a pre-market. It can't be, right? The AVM has to have a record and has to control and take in the value that backs every one of these. And so every one of these is like a TGE. If you want to buy Navor, if you're the first buyer, you're the only holder. There's nobody that can dump on you. If you're the fifth buyer, only the first 4 buyers can dump on you. So like it's like a very transparent, fair way to launch a token.
Yeah,
and we'll have a sniper protection.
Your new opportunity to get on board with something that has already gone, whatever it is, multiples, and you feel like you're late to it. Okay, now there's a Zen market, a nav ore, right?
Yeah.
And you can feel like you're late to ore, but you were the first person to buy Navor, and then Navor goes 10.25x.
In terms of ore, outperformance.
In terms of ore.
And so that's a really good point you brought up. There's one thing people love in crypto more than anything, and that's being early, right? Like everyone wants to be early. Now, that used to be the case. Now it's actually like, if you're too early, you're going to get dumped on, because like we said, there's all these pre-mines and airdrops. So that even that meta is kind of dead. Like if you're early to plasma, you're not in good shape.
You want to let it bleed out for
like you almost want to be late to stuff now and let it bottom out and put in some weekly W's and buy volume and whatever. And so that's an unfortunate byproduct of the meta we talked about earlier. But for all of our NAV listings, it is a chance for any holder of any token to be early to a better version of their token, a new derivative. And this is the crazy thing. And this was actually a change that Sid made to the app this week. His aha moment was like, originally the homepage was pretty standard for an exchange. It was kind of like, here's the price, here's the volume, here's, and he realized very correctly that the price of this token in ore terms is not that important. It's kind of meaningless. It's like, hey, Navor is worth 0.04 ore. It's like, okay, who cares, right? What's the point? Well, the point is, and the innovation here is that this will outperform the underlying asset. And so that's what we should highlight. And so he came up with this metric that he's calling the multiple. And it's really capturing what this token does. And it amplifies. With a positive skew, it amplifies your upside or your exposure to this token. And I want to clarify that positive skew comment. Pure amplification is just leverage. It's standard leverage, right? And I'm going to pick on Hilo today. They've got this XSOL token that I hold some of. And it is a leverage position on Solana, I think floating around 2.75 leverage. So you have amplified Solana exposure, but it's not positive skew, right? If it goes up, I go up 2.75 more. If it goes down, I go down 2.75 more. It's pure neutral amplification in both directions. Nirvana, and specifically the Samsara market and these NAV tokens, it introduces positive skew amplification, where your upside is amplified infinitely. And your downside is amplified in a bounded way. It has capped downside amplification and, unlimited upside amplification. And that's a really new, interesting, and frankly, entirely unique to us as a concept. And like I said, when you bring something this different into the market, it takes a little time to wrap heads around.
Yeah, everyone just tells you to get the fuck out, apparently. Like, that's basically most new tech, right?
Well,
So
yeah, in some
you guys are
cases,
sort
and
of in that phase. Yeah.
you know, one of the friendlier no's that I received was somebody who just said, like, you know, this is fantastic. This looks really good. You know, this is crazy. It's awesome. You're probably like 2 or 3 years ahead of your time. You know, like, I don't know if the market's ready for this right now. And so, and I was like, you know, that's a good shout. I don't mind that. And they said, and it's not a bad thing. They said, but like, enjoy the road ahead because you're going to have a lot of explaining to do and proof of use and all that. And then that's what we're working on. But let me explain this multiple. What does this mean? On November 24th at noon, this ore market went live. This NAV ore market went live. And since then, starting from that $1 price, NAV ore has outperformed ore by 10.25x. That's what this multiple means. And you can see this little thing here. You probably can't read it if you're on your mobile. But the idea is it just highlights whatever that amplification is. Now you can see here that the dollar value of this NAVOR token right now is $3.72. And so that means if it launched at $1, approximately $1 worth of ore, and it's now trading at $3.72 worth of ore, it is up purely in dollar terms, 272%. But in that time since then, I don't have it right in front of me, but ore has dropped. It has dropped. I think it was trading at around 200. Actually, I'm just going to pull it up. And so it has gone down in value, maybe 40%. I think a little more. I think it was 38 yesterday. So maybe it's down 50%, whatever it is.
Yeah.
And in that time, this has gone up 272% in ore. And in other words, the combined outperformance is 10.25x. And I should point out that that is after we crashed this thing. We tried our best to erase all the value. We said, okay, we're on this exchange. There's new derivatives. Everyone, you know, buy these things. You know, again, this is free money. So I'm not like, it's really hard to say exactly how this compares to when the NAV or market goes live, and it will as soon as we're live. But we tried our best.
Assuming it was live and had all of this value already in it, and then you tried to get rid of all of that value.
Erase value. That was the goal of this campaign. Right? Break the floor, destroy value. And in our attempts to do that, and everyone in the community, we had about 350 wallets over 2 days that were buying this stuff and engaging with the app. And we said, okay, guys, like during this live stream, like nuke all value, just take it to zero. And you just can't. And that's the innovation here. That's the key piece. Now, these are assets that don't have that baked into their core, like anything like Nirvana does, like anything from the launch pads will. You know, those tokens will literally come out with a floor price. 100% of the supply will be baked into this AVM bonding curve. And there'll be a different game there, and it's going to be really good. But these are like normal, sort of typical crypto assets. You know, Bonk, Nav Bonk has outperformed Bonk 17.44x since we launched it. And that's after we said, everyone sell everything, right? And so it's a really powerful display of what happens when you have a protocol that locks in value as it grows. And here's probably the most exciting piece for me. And this we got to zoom in for. You see here, this is like, let's generate a black swan. Right?
Yeah.
Like for example,
FTX crash.
Yeah, FTX crash, COVID crash, tariff scare, whatever it is, like whatever we want to call these black swans, like let's have everyone behave as though it is the, you know, sell everything Armageddon. And in that moment, as every piece of the supply that was held sold, the floor actually went higher because the fees that were generated from that selling, portion of those go directly into the floor. That bonk that is collected in the fee gets placed directly into the NAV bonk market to support the growth of everyone who doesn't sell. And so when this red line ticks up, you can borrow more bonk out. So if you want to go to bonk rewards, you say, yeah, I like bonk, but I want to get the yield from the bonk rewards staking, you know, platform, or I like ore, but you know, 22% native stake back at their homepage. I don't know if I want to sit on this other derivative. It's like, well, you actually don't have to choose between the two. You can take your ore, take your bonk, come and mint the NAV token, and then instantly borrow back up to the floor value of that non-liquidatable interest-free and take it back to whatever staking portal you want and still participate in that. And then over time, every time this red line ticks higher, it may not be a red line forever, but for now it's a red line, the floor. As soon as it ticks higher, the borrow capacity for everybody holding NAV bonk or NAV or increases. They can just same stake. They haven't added any more value, but they can take more out. That's
So
like your dividend.
this is the part that boggles my mind is if ever any of these assets is down to floor price and you're holding the underlying asset, like there's no reason not to be buying it at floor price.
Yes. Well, yes and no. If you're long on that asset, absolutely, you should be converting it into a NAV token. Mathematically, there's zero reason not to. But these are based on volatile assets. So we are going to see people selling at the floor because you might think one of these assets is going to drop 80% in value.
Yeah.
And so the dollar value of the floor, which I should pull up, see the dollar value of the floor can actually go down because it's priced in a volatile asset. Now, in the case of Nirvana, selling at the floor makes no sense. And we talked about this yesterday. There's this ongoing philosophical debate of like, will anyone ever sell at the floor? Because in Nirvana's case, the floor is made of USDC. And so at the floor, with your stake to ANA, you can borrow the 100% of your value. You know, you can essentially leave with the full value backing your token without selling it. And so theoretically, you never would sell at the floor in that example, less the fees after borrow. Like there's no logical reason. I think we will see selling at the floor in these tokens at some point because the underlying is volatile. So if OR just went up 100x and you want to capture that gain and you don't want to round trip anything, maybe it's trading at its floor, but you think that floor in dollar terms, you can see here it's dropping. Maybe somebody will sell at the floor. But the point is, you're absolutely right. They could borrow the same amount of OR that they would get from selling it, and then maintain their NAV token upside. So it's a fantastic new design. And one thing you just pointed out is this column here. This column here reflects that. So at the floor, this reads as 100%. And that just means 100% of what you would put in or deposit or buy right now is backed. You're at the floor. So if you buy a bunch now, you could sell it for the same amount of OR later or amount of Bitcoin later. And so when this number is 100%, the downside in your token terms goes to zero. The asymmetry rises to infinity. If things are mooning and they're way off the floor and it's going into price discovery and there's more liquidity entering the system, this number will drop, into 50% town. At 50%, the floor starts to track price higher. And so you won't see these numbers go below 50% too often. And if they do, it'll be temporary because the floor will be ratcheting higher and back. I think when these things launch, you could see one shoot up 10x and the floor doesn't instantly just mark up with it. And you can see that actually on these charts, it's kind of stair steps. There's a little bit of a time delay on that because programs take time and it's designed to not just be instant. And I think that's a really nice design. The floor going up is dopamine city, right? And it's exciting. It's kind of like, raise the floor, raise the floor. So you want to extend that experience a little bit. And then, but again, the big piece here that I think is the most exciting for everyone in our community that's loving this feature idea is you can see here, the price was relatively flat, the purple up here. And yet the floor was ticking higher. And that's because of the fees. And we didn't always have fee to floor mechanism. That's new for Samsara. It's going to be placed back in Nirvana as well. In fact, I'll give you a visual example of the absence of that, right? The floor in Nirvana's case right now in its current form only goes up if a certain price is hit. The fees do not yet redirect directly into the floor, and that change is coming soon. And so, even back at Nirvana here, it's like 12% off the floor. That's your downside. The most you cannot have back, worst case scenario, if you sold at the floor, is 12% loss on a position. And so, and of course, the upside is uncapped. And so you have this asymmetric bet that emerges. And so this is what it looks like without that fee to floor model. And again, that's coming to Nirvana very soon. It was built for Samsara to be tested and run and stress tested. And then that's going to be taken once it's like airtight, which it pretty much is now. We'll reapply that back. And so even in sort of the absence of new liquidity and excitement and price discovery and these periods of consolidation, which there will be, the fees just come into the floor. So there's this real communal sense of like, we can all grow together. We can never be liquidated. We can access credit when we want to go stake somewhere else, or when we want to loop through some other strategy, or if I just want to hold, I am getting positive skew amplification on these assets. And so Samsara will ebb and flow with people's bullishness or belief in the underlying asset, right? If I don't think Bitcoin or JLP or MSOL has value or is going to go up, well, these derivatives aren't very interesting to me because they are an amplified bet on those things going up.
Yeah.
So asset selection will be important for us. We don't want to list things that are super hyperinflationary or just garbage or bad, because we want to list, we're not going to like gatekeep this thing entirely, but we obviously want to list assets that sort of have our core principles in mind, at least in the beginning, right? At the end of the day, we're also not here to make financial decisions for people. If you want to trade something, every token sits in somebody's wallet. There's holders and buyers and interest everywhere for everything. So, or most things. So we're not going to gatekeep it too hard, but certainly would like to have a focus on quality assets, at least in the phase 1, phase 2 of this stuff. Anyways, so
for the brand, right? But I mean,
yeah,
it's
look,
an interesting derivative because
yeah.
it really is like, if you are already bullish on it, then under certain circumstances, it is like a no-brainer to want to convert to the NAV version.
It really is. If you believe in it, and this is going back to belief. Belief is at an all-time low right now. Maybe not like this week, but like last week it was. It may go back there if we drop below 90, K again. This afternoon. Like it's tough to say, but belief is eroding. Belief in quality, belief in future value growth, belief in, like people are tired. I'm tired, boss. Like it's just, that is creeping into people's minds, and you see it on the charts. Any little rally just gets eaten up. People are like, I'm getting out now. And that's been the case for a lot of altcoins. We've little pockets of outperformance. And the good news here, painful but good, is that a lot of stuff won't come back. Garbage is getting washed out. It's this washing machine cycle. It's the great cleanse. And more you're reading about talk of valuations and revenue. And, people are really starting, they're getting a crash course in value. And like, where does it come from? Oh my God, this doesn't have any revenue. Like there's nothing here, and then people are really, that was never an issue in 2017. 2020, 2021. It was just like things are valued here. Like it was all speculative attachment to ETH. It was like, well, ETH is 500 billion, and this is faster and cheaper, so it should be at least 300 billion. And everything was tied to a valuation of ETH in particular. And so when ETH crashed, everything was like, whoa, we were wrong. ETH's not even worth that, so this can't be worth this. And it was this reflexive insanity. And now the anchoring to ETH's val is softening significantly. And we're everyone's grasping at like, well, what can we anchor to? And revenue is the real answer to that. So yeah, we would like to focus on revenue generating tokens, yield bearing tokens. But yeah, we're going to list some meme coins and stuff too, because again, it's not our job to tell people what they like. If there's demand for something and people want it, then there's a fervent community of it holding that token. We're going to put it out there, and it'll be up to those holders to decide if they want to have, hold a derivative that locks in gains along the way and amplifies exposure. And I can't get over this multiple thing. The first day I looked at it, I was like, that's a little weird. I don't really understand it. But after we crashed everything yesterday, and then these multiples were in the 20s before that crash. And of course, this is testnet money. We're just running it up. So, it remains to be seen how it'll play in real life. But these multiples will always be 1x at launch. They'll never be less than 1x because they launched at $1 and they can't go below that because there's no supply.
People are going to try to ape those launches.
Dude, well, we have sniper protection. So buyers beware. There is sniper protection. The first 2 hours, there's going to be an insanely high fee that will drip exponentially through 2 hours. That'll be made clear on the site during launch, but I just want to be abundantly clear. We're not going to have gas wars at the launch. We don't want people botting and rushing the gate and making this nasty. So we've put in a fairly they will, and a fairly simple sniper protection so that you can buy on the second one, but you're going to pay a 97% fee. and it's not ideal. And then like it's going to be really exciting to see like at which point of this fee decay, because I even think at a 50% fee, I still might want to buy the first one because
I will.
yeah. You're like, I still might. I don't
right now.
know what people like, I'm working on the team here. And so people are DMing me like, what's the meta? Like, what do we do? I'm like, I don't know.
I don't know, dude.
It's a new thing. This kind of
Yeah.
launch has never been done. What I do know by design is this will be a green candle factory at launch because there's no supply. All right. When you buy the first one, you're the only buyer. You can't even, well, you could actually sell it back. Be weird. But the point is the first couple candles have to be green because there's no supply. They're only being bought. Now, eventually, very quickly, there'll be a handful of holders and they could sell. And so you'll have some red. But the idea is every launch starts at 1 and it doesn't exist anywhere else. And so it cannot be sold, can only be bought. And so everything, like we're taking that dream of Nirvana, really of Bitcoin, where it starts at no value. And then if someone thinks there's value there, they can turn on the computer, run their POW system and assign and, essentially invest value into it. They say, I think there's value here. I'm going to give it some energy. And POW is born. In Nirvana's case, it was like, I think there's value here. I'm going to put in some USDC and mint some. And we're taking that model and applying it to these tokens. And there's going to be one listing at a time because it is a TGE kind of thing. It's not like we're just going to go live with 50 tokens on day one like another exchange might. So it's very unique and for so many reasons. But at the end of the day, it's just positive skew amplification. There's a lot going on here. There's bells and whistles. I could get into Prana and rev share and all these things. But at some point it starts to get overwhelming for people. They say, oh, DeFi, this is crazy. And so bringing it all back to just a simplified version of, if I am holding Bonk because presumably I'm bullish on it, I think it will have more value in the future, or I'm holding JLP because I like the yield and I love that product and I think all those swaps and driving some yield into this thing, it's got a decent yield stack. I am bullish on it. I want to hold it. If you're holding these assets, or if you're taking USDC to swap into these assets, just hold the NAV. Just take the NAV token, because over time, as you can see from this demo we did, even in really nasty scenarios, over time, they just grow. They just grow in terms of this asset that, again, if you're holding it, you might as well be holding the NAV. And so buy and hold. And let's not even get into it, but the, borrow to exit is another really nice touch on this, where, ride the bull in an asset that gives you access to a liquidation-free, interest-free loan at the end of it all. Because in a lot of countries, debt is treated very differently under tax code. And that's a fantastic benefit that you need to consult with your own accountants about. But I've consulted with mine and he's like, yeah, that sounds really dope. So, there's a lot to unpack, but at the same time, it's a very simple idea, which is let's not manufacture value out of thin air and then hope that it catches. Let's create an asset that starts at minimum value and let the market assign its value. No gimmicks, no airdrops or pre-mines, all these things that you use to, put lipstick on this stuff. Let's just put it out pure and simple and see how it goes and let the market decide. Let the market assign the value, and not the people. So that's the dream. That's the
one really interesting thing will be to see how like your institutional traders treat this as a derivative, because it's like you have your options markets, which were created to solve a problem of like, I want to be able to buy this or sell this at a later date. I can't do it right now, but at this price, right? And then now you have, like you have the same with futures markets. They were created to solve a problem, but then you have people that figure out that under certain circumstances, I can always buy an options contract and short something over here, and I'm guaranteed to get some value out of that. I think that this will become a thing as well for what we're seeing here. And that's going to be a huge volume driver as well, because you said like, why not, why on Nirvana, why would you sell into the floor, right? Would anyone ever do that? But even with these other assets, you could run a delta neutral strategy that involves you getting in at floor price and then shorting the asset somewhere else. And now you've created this delta neutral strategy back to US dollars where you took advantage of something being at floor price on this derivative. And
yes,
like that will probably bring a shit ton of volume into this anytime that there is some crash on any of these tokens, which is, I think, overall very bullish for it as it matures.
Yeah, you touched on something really interesting there, that this is a new primitive. It's a new derivative, it's a new exchange, it's a new product, and it has very unique properties. And this has come up a lot in our community over the last year, where people are like, well, doesn't that mean, like, if I buy NAV OR with my OR and then I borrow OR against it and I sell that OR to cash, like, aren't I short? And I'm like, yeah, you're in a synthetic short right now. There's no liquidation on that short. If OR moons tomorrow, good luck paying off your debt. You're going to have to buy that OR at a higher price to pay it down. But you don't have to, right? Because as the NAV, the floor of that NAV OR increases, you can just borrow out more of that now mooned OR.
Yeah.
And so there's this interesting dynamic that emerges. Once we get the SDK and the APIs out, I think smarter people than us that just live in the trenches and think about these kinds of things are going to come up with some really interesting, like you say, delta neutral strategies. Like, I can't even imagine to sort of speculate on exactly how those will work. But there'll be some edge here. There'll be some edge here, absolutely, where you have an asset that is priced in something that you can short or long on another exchange. And it has its bounded limitations, right? This thing has a floor price. I won't pretend to know what people are going to do with this, but the opportunity to establish new edge and new strategies, vaults, delta neutral things, I'm really excited to see that stuff come to life. And first, we got to get live. We got to get live on mainnet. We got to put these things out there. We got to list a bunch of assets over a period of time, probably 2 a week for the first few months. And then we got to get the SDK and the APIs released so that people can integrate and play with it on their own platforms or design, third-party apps and layers. And yeah, this is going to have a lot of interesting things built around it, because you can't find this design anywhere else. It's we're the only shop in town that has these derivative assets that have these properties. And yeah, I'm excited. I'm excited for that, beyond just the vanilla strategy, which I think is the most obvious and the simplest and the one we should talk about, which is like, just buy the NAV token and hold it. If you're going to hold the underlying, hold the NAV. And that'll catch on at some point. If it's not abundantly obvious by the time we launch, it'll become obvious pretty soon that these things have like locked in outperformance over time. And we've demonstrated that on the DevNet, and we'll demonstrate that in real time on the mainnet. And eventually, I think it's inevitable that people just look at this and they say, whoa, like, yeah, if I'm going to be long one of these assets, I might as well hold this NAV token, because a lot of the value just comes right back into the token through this floor, fee to floor. Let's see. Bonk had the most pronounced one, where it's like, holy shit, the world's coming to an end. Whoa, I can borrow more Bonk.
Yeah,
it's like, it goes my credit line increased. My FTX crashed, and I have more credit. Like, what the heck is going on here? This is weird. And again, it is so bizarre. It's bizarro town, and out there with regards to the status quo, that it's important that we demonstrate this and manufacture negative outcomes, as negative as they can be. It's the best way to prove the model.
Yeah, exactly. Yeah. Well, I mean, I want to keep talking about all the ways that I would create delta neutral strategies. I'm gonna hit you up after it, because that's like a bit of an aha moment that I had while we were talking here.
You're like, I've just thought of anything. Yeah, look, I've read a lot of novels on this in our Discord of guys that have been like, okay, like they look like the tinfoil guy with the map. He's just like, what are we gonna do? And I'm like, it's a little beyond me, honestly. Some of these conversations the guys are having, I'm like, that sounds fantastic. Build it, or do it. Show me. I want to see some data.
People will. It'll be like the new options market, the new perpetual futures, right? Like, people find ways to turn that into a new strategy, and often those strategies end up being the legs that those markets have to do just billions and billions in volume. I
When
argue
automated
there's an
strategies come
opportunity for that.
online,
Yeah.
automation comes in, it gets really interesting. There's been some concerns, of course, people in our community, they're like, well, this looks pretty new, but even I'm a little confused. Like, is anyone going to understand this stuff? And I just like pointing out to them that like perpetual futures were new at one point.
Mhm.
In BitMEX 2017, I don't even know, maybe they launched in 2016, but I became aware of them in 2017 and they were new. Funding rates, how this works. Arthur Hayes, shout out, he invented, the greatest derivative in crypto history. Now, whether it's the best, whether we like them, the impact of all this leverage in the system, I don't know. I think we
Yeah.
do, because when the leverage gets washed out, prices go down and people go, wait a sec, like I liked the value more when it was levered up, so I think in some ways it's good and
Yeah.
bad. There is more capturable value in the system because of this leverage. But it also can just rug in very quick order. And then people say they hate it then. They didn't hate it
Yeah.
when it made Bitcoin go up, 5x back in whatever year. So, point being, there was a steep learning curve, a very slow adoption rate for perps. And there wasn't only one show in town. Eventually Binance perps went live and now everyone's got them, and now there's probably 100 perps protocols on chain doing it various ways. And this is very much in that same boat. Like even
Yeah.
Uniswap sat in relative obscurity for 2 years, right? 2018, 2019. It didn't really get cool and obvious until 2020, and now every chain, it's like coming out, it's like, what's the dex, where's the dex, what do I do?
Yeah.
It's very normal, it's very obvious. And in that sense, I think I'd put this on that scale where you have this new derivative. It's a little bit different. Well, it's actually a lot different. There's new bells and whistles. There's new things you have to understand. But the data is sound. The design is obvious. When you look at the metrics that Sid put out this week, it's like the best way to highlight that. Now, whether
Yeah.
we call it the multiple or we come up with like a new name in the next little bit before we go live, there's a few little tweaks we want to make here so that it is very clear and very
Mhm.
obvious what the benefits of these things are. And then, as you said, once SDKs go live and everyone else can kind of come and play with this, you start to see some algorithms go live, and I think there's going to be some real edge here that people can capture. And the nice thing is, if you're sitting at home and you're like, oh, I don't have algorithms, I don't know how to, I'm not going to delta short or delta neutral this. Like, you don't have to. Just buy the NAV. You can, if you're bullish on the underlying, amplify that exposure, bounded downside, unlimited upside, like that's the amplification.
Yeah.
It's skewed positively, and that's unique
Yeah,
to us.
that's another cool thing is like it's a derivative that's more friendly to the retail user, where perps is like retail thinks they understand it, and then they, for the most part, just get rinsed because they
I get
don't.
rinsed on perps, dude. Like perps are
Yeah,
hard, man, and I've had success with
yeah,
them, and I've perps. Look, I'm gonna give a little piece of alpha here for anyone watching. I was talking to my trade coach the other day, the kind of mindset coach, but we talked about trading a little bit, and he pointed something out to me because I was doing a little bit of perps trading over the summer, and here and there. Like I don't anymore. I've completely shut my account off because one of the things he pointed out, he's like, look, that is the most competitive landscape in crypto. Like
yeah.
when you're sitting there trading perps, you are up against the most sophisticated actors in crypto, and they have systems and they have strategies and they, like whatever that case may be, how paranoid you want to feel today. Like, are they painting pictures just to fuck you up and then they're just taking your stops and running? Like, you are up against it. It's like the Forex of crypto. And for
Mhm.
anyone who's not familiar, the founder of TRI, where I learned how to trade, and Brian Beamish, shout out if you're listening. And he told us on day one, he's like, just stay away from Forex. He's like, just don't go
Yeah,
to Forex. The same kind of thing, right? He's like, you are up against nation states level
yeah, yeah,
sophistication, and they will take your stops and break your heart. And yeah, there's probably some guys out there that can trade Forex profitably, but good luck. Point is, you need all your attention. You need to be a pro. And if you're not putting in that level of effort and 24/7, 365 focus, and if you don't have established quantifiable edge, you should stay away. It's a
Well,
scary
and
place to be, and it's got the allure of outsized returns, but it's got the
yeah.
reality of outsized losses.
Well,
And
also the price of being wrong and experimenting in perps is too great. Whereas like even if that was the case with NAV markets, Like, you would have the super experienced trader maybe moving price around for reasons that you don't understand, but you still do understand that if you buy this with your underlying assets, this is the price I can get out at guaranteed, and then the upside is infinite. You understand that, and that's kind of enough for you to participate in it without getting rinsed because you participated in it and didn't understand what those other parties are doing.
Yeah. Like, don't get it twisted. You can get rinsed. I'm sure someone will get rinsed trading these things. They'll think that they've found something, and like, you know, like you can lever up. You can borrow ore against your NAV ore and then buy more NAV ore and then borrow more and buy. Like, you can loop to the max on these things, and you can't get liquidated, but at the floor, your equity is zero. You will lose everything if you're forced to sell at that floor, which you won't be forced to. And obviously you wouldn't, because your equity would be zero. But in that sense, like, I want to be clear here. If we talk about how fantastic this design is, it is not without risk. And the market price that you buy at is not guaranteed at all, right? That could drop the next tick, right? Somebody could sell as you buy. Like, you know, there's no risk-free in the market. And so what this product is not about is guaranteeing returns. What this product is about is setting up an environment where somebody can come in less sophisticated, not necessarily needing to have, you know, 5 screens and 3 algorithms running, whatever, not on some other perps exchange, delta neutraling, whatever. You don't need to have all that. For the most part, I think the majority of users, holders, whatever, are just buy and hold spot traders who are like, or like DeFi leverage, you know, loop guys, where they say, okay, like, I'm really bullish on ore. I love the 22% stake rate or whatever it is today, 19, I don't know. But I want to stake my ore over there. I'm going to go buy NAV or borrow my ore and then go do it. So I'm getting this stack, right? Where it's like, now I have exposure to this. It doesn't come with interest or liquidation risk. And now I'm going to go take that same 22% I was anyways. This is a store of value asset. I'm bullish on ore. This thing's going to go up. So I'm going to do it this way. And so it's a much simpler way. And again, without introducing those devastating liquidation issues. So yeah, it's new, it's different. It's flipping a lot of the status quo on its head. And it's going, you know, it has been met with some skepticism as we go through, but most, if not all of that skepticism is washed away when we do things like break the floor this week, where we say, we will give you $50,000 if you can tell us why this breaks. You know, like, if you can come out here and we're going to join you. Like, I bought a lot of these things this week on the testnet and just ran it up. And I try my best to sell it too. I was like, guys, let's take this thing through the floor, because if it's going to go through the floor, I'd like to know now.
Yeah.
You know, I'd like to know today before we're at $1 billion TVL. You know what I mean? Like, please, let's break it. But the premise we've set out with from the start is that it's just math. If you want to break it, it would be akin to thinking, like, you know, imagine walking into a group of people, like a crowd, and you're like, this calculator doesn't work, you know? And it's just like, oh yeah, like, yeah, watch this, like 4 plus 4 is not going to equal 8. And it's like, 8.
It's 8.
4 plus 4, 8. And that scales, right? 400 plus 400 is 800. 4,000 plus 4,000 is 8,000. So, you know, we didn't have 25 billion TVL in this thing when we tried to crash it, but the math is the math, no matter how many zeros you add to it. And this isn't the last campaign we'll run like this. We'll probably do them quarterly. You know, I think as these things come in and they launch and they grow, and there's always going to be a sideliner who's looking at this saying, like, oh, that's too good to be true. That doesn't work that way. And then we'll just be like, okay, like, you know what? We're going to up the prize. We're going to up the TVL. We're going to increase the faucet size. You know, I told him, I was like, look, can we just mint like $10,000 of tokens per click? I think this week we were minting $400 worth of tokens per click. I said, like, let's just run it up. Let's do this testnet demo. We could run it on mainnet next time. And we'll just get, why not 100 billion? Like, let's put 100 billion TVL into this fake market.
Doing it on mainnet would be crazy.
You know, this clone market, and then and we'll crash that, and it's just going to keep working. And I think each time we run it, you just get a new set of understanding, and the skepticism kind of washes away with the math and code. And I think people in general in crypto are gravitating, should be, or will be gravitating towards math and code. You know, Bitcoin is Bitcoin because it had math and code innovations regarding in monetary policy and who owns what, transfer of value. And it's the most valuable crypto asset. That was its main innovation. Not that much in comparison to all the bells and whistles that have been created since, but at its core, that is such an important thing. Let's get rid of the reliance on human trust. And that's what we've done here. we've gotten rid of the reliance on human trust when it comes to liquidity and value. The liquidity will be there. Some amount of value will be there. And try as we might this week, we tried to remove all value, and all the multiples are still sitting at 5 and 10x. So Finn. That's it. That's all I've got to say on that. Like going in circles at this point.
I think we already I think we might have already set the record for longest spicy takes. So
I got spicy takes for days, baby. I'm glad you came on. And by the way, I love the show. I love the name of the show. Like spicy takes.
Just it's that's what it is.
Well, I hope these are spicy enough for you guys. It's a spicy protocol. It's a spicy platform, and I'm really excited. We've been building this thing since, well, I don't know. We've been talking about it since April. I think it was already well underway or somewhat underway by then. And our community will be more excited than anyone, myself included, to just see this thing go live. And I think we're under a month at this point.
Yeah. Okay. Yeah. So speaking of, because we do have to wrap up, how can everyone here get involved? How can they show support, and what's coming up that they should look out for from you guys?
Yeah, good shout. We don't have a points program. We don't have airdrops. I apologize. This is the whole fucking point, guys. Spicy Take 101. Like, let's rebuild value from the ground up without that. However, if you join the Discord, you will find a very friendly community filled with people who are happy to answer questions. Everyone's excited to talk about this, because once you've seen behind this curtain, it's really hard to unsee it, and all you want to do is talk about it. Kind of like Bitcoin when I first got into it. You're like, guys, sitting down at dinner, So we've got a fervent community that is hell bent on helping people understand this. Myself is I'm in there with some of the team members, so taking you through it. So I'd say join the Discord, tell your friends. I dare say NAV token launches and this meta that evolves around them is got kingmaker potential. So I'm very excited to see it go live. And there's not a whole lot to do at this moment, waitlist wise, anything like that, other than to just join the community, engage with us on Twitter, and follow the Twitters. Follow my handle, follow Sid. You can see him on the Nirvana handle. There it is. And just stay tuned, because this will be live in and around or less than 1 month. And I say that uncertainly because I'm not the dev. And every time I think we're ready, Sid comes out with a new feature, a new twist, a new thing. And it's just the app from 2 months ago when we thought maybe we'll launch to now is 0 to 1. Like it's
we can relate to that.
Yeah.
I'll be sitting here telling Karthik, like, come on, we need to launch. And then he's like, no, but look at this. And then he explains it to me. I'm like, oh, fuck, that's so cool.
Yeah, exactly. And so at some point, you just got to go live, of course. Like you could sit around, good is the enemy of perfection, or perfection is the enemy of good. But like, I'm super impressed with the direction the app has taken in the platform. And even just this week, like,
me too.
I think Sid pulled like a triple all-nighter last weekend. He's like, okay, we're going to do this demo. Like, I've got 50 new things. And so it's going to be worth the wait. It's going to just land so nicely when it's all fine and done. And when you see it, you'll be like, oh, okay, like those delays were warranted. Those, and then we have the debate about, like, do you want to launch during Christmas? Do you want to push it to Jan 1st, Jan 5th? So exactly the date is unsure. I am confident, though, that in a month from now, we'll be talking about it as though it is live.
Sweet. Well, we'll be there.
Yeah. In the meantime, Discord, Twitter, just engage with us, talk about what we're doing with us, take you through it. And
spicy take of the day is that next Thanksgiving you'll be talking about Nirvana and the NAV markets and not Bitcoin.
Yeah. Well, look, let's see what this homepage looks like next Thanksgiving. There's going to be a lot of assets listed on here. I'm so excited to see what their multiples look like. And all these stats, the volume, the rev share. I didn't even get into rev share. So I guess what I should point out is just the same way some of the revenue goes into the floor for all these markets, some of that revenue, an equal part of that revenue, actually goes to Prana holders, Prana stakers who come to this market to govern it. And the only way to get Prana is to buy on a token and stake it. And you don't just,
live, by the way.
Yeah, on a token's been live since December.
So if you
really want to get ahead of this platform,
yeah.
By the way, 100% of the revenue that we make from this platform, we're using to buy the on a token because we can borrow USDC against it to fund operations. It is a treasury asset.
Yep.
Should point that out. It's a key piece. Nirvana ANA token lives at the center of this universe, and every product that gets built around it, the revenue from that, or in the case of the Launchpads, 15% of the revenue from that just goes into buying ANA, because it is the treasury asset that anchors this whole thing. So if I wanted to be prepared, I am prepared. I've been stacking ANA and Prana all year, but if I wanted to be prepared and I didn't know what this was before today, and in a month from now I expected to see this platform go live, I'd probably want to hold some Prana. And the only way to get that is to stake ANA tokens, and then you get a live drip of Prana tokens. It's not a V33 where you can, buy and lock and then you get a whole bunch. You buy, you don't have to lock, and you get a little each day. So building out a Prana position specifically for this, so you can be depositing into these markets to capture some of that revenue. That's probably an interesting, this is a good thing to do if you want to be like sitting in the driver's seat for this launch, where I don't know which NAV token I want to buy, but I think there's going to be some revenue there. I'd like to own a piece of it. Prana is the only way to do that. So I should point that out.
Yeah. So if you go to the Nirvana website, tokens live there. You guys can try it out, by buying some. Not financial advice.
Not from me. No, this is just me talking from a passion point of view. And I want to point out, I am on the team. I'm head of growth and operations, but as a holder first. And frankly, I still feel like I'm a holder first and foremost. I'm a fan of this. This is how I want the world to operate. I want to see value and liquidity become properties of an asset. I want to see code and math backing the things that I'm holding, and not humans that I have to trust that I've never met that are going to take my money. It's not about doom and gloom. It's just about like a brighter future. And that's why I joined the team. But I was a holder and investor first, and I still am. This is a passion thing for me. This is not a job. I don't have a salary. Let's be clear. I don't get paid a salary. I have never been paid to work here. I still haven't been. I'm going to Breakpoint next week on my dollar. So like, this is truly a passion point for me. And I'm not a financial advisor, but this is where my head's at.
Sweet. Well, see you at Breakpoint then. I'll be there.
Oh yeah, dude. I'm gonna see you there next week. I'm flying out on Tuesday. All day yesterday, I was like, I'm flying Wednesday, and then I looked at my calendar yesterday. I was like, I'm flying Tuesday. Like, good thing I checked that. So Tuesday next week, I'll be.
Hit me up when you land. I'll be there already. So.
Ooh, in Dubai?
No, in Abu Dhabi.
Okay, so we can't drive to do Abu Dhabi together. That's okay. I'll drive alone. I'll see you down there.
Yeah, see me.
All right, guys. Thanks for coming out today and watching and listening. And if you have any questions, follow-ups, and you're just interested, join the Discord. The link is in the description. I don't think.
Get in there.
But it's on our Twitter, so you can check it out. All right.
Stay spicy, guys.
Take care, dude. Thanks for the spicy takes.
Of course. Of course.